This is FinTech Insider News. This week, business leaders lose a month to fraud each year, according to research from Payabl. UK banks seek alternative payment system to Visa and Mastercard amid fears Trump could turn them off. And global FinTech funding rebounded in 2025. But what does that really mean going forward into 2026? We'll be tackling all of this and more on today's news, so don't go anywhere.
This episode is brought to you by Indeed. Stop waiting around for the perfect candidate. Instead, use Indeed sponsored jobs to find the right people with the right skills fast. It's a simple way to make sure your listing is the first candidates see. According to Indeed data, sponsored jobs have 4 times more applicants than non-sponsored jobs. So go build your dream team today with Indeed. Get a $75 sponsored job credit at Indeed.com/podcast. Terms and conditions apply.
Hello and welcome to episode 1036 FinTech Insider News, brought to you by 11FS, the 5-time consultancy of the year that works with financial providers big and small to build the next generation of financial services. I am Ross Gallagher, the head of consulting at 11FS. To help me unpack the biggest and most interesting stories from fintech and financial services from the past week, I'm joined by a quite brilliant panel of guests. First up, we have a welcome back to the show for Samantha Emery, FS Executive and Non-Executive Director. Samantha, thank you so much for joining us. Maybe you can just remind our listeners a little bit about yourself and maybe what you've been up to since you were last on the show.
Fantastic. It's brilliant to be back. So what I thought would be really good to talk about was some fascinating work I've been doing with Nadia Edwards-Dashti, exploring what we see as a critical blind spot in our sector that could actually jeopardize its future growth and stability. And as is so often the case, it all comes down to behaviors and practices. And what we're seeing is that as budgets and focus shift away from embedding inclusion, equity, and diversity into ways of working, we risk leaving the systems that we aim to change still completely intact. And without those diverse voices around the table, we see that UK financial services will struggle to outperform, regain its status as a global leader. But more importantly, our research has identified a toxic combination of circumstances that actually compound this issue. So firstly, we see the sector's risk profile has skyrocketed as we look to adopt new tech like AI and quantum, and we need the diverse perspectives here to make sure we're responsibly innovating, managing the risks. But at the same time, we're seeing a tight job market where groupthink and conformity are back on the rise. People are hesitating to speak up, fearing for their jobs, which obviously stifles creativity and sustainable growth. And what we've been finding is that whilst the media has been touching on aspects of this issue, like the pullback on DE&I, like biases in AI, our work is the first time it's actually all been brought together to consider the sectoral outcomes holistically, so that business leaders, such as your listeners, regulators, government, can see why it's crucial for them to address these interconnected challenges head on.
Wow. You mentioned about bringing it all together. It's so right, because all of that sort of resonates with sort of gut feel, doesn't it? But having that depth of sort of research and analysis to sit behind it, I think is so important. And Nadia as well, another great friend of the show. So I'll really be looking forward to sort of getting into some of that stuff when it's ready to go, Samantha. And look, thank you so much for coming on back on the show as well. Right, next up, we have another return to the podcast for Sophie, Condie, CEO of Shieldpay. Sophie, welcome back. Lovely to see you again. Maybe you can just give us a little reintroduction, a little reminder for our listeners about Shieldpay and any highlights since you last joined us.
Yeah, of course. So Sophie Condie, as you said, CEO of Shieldpay. So personally, I think just a little overview of why some of the topics we're going to talk about today are super interesting to me, as my career spans 20 years of financial services across retail banking, corporate banking, and now fintechs as well. So a lot of these subjects we're covering today are super interesting to me, particularly. So I'm looking forward to delving into those. Shieldpay, if I give an introduction to Shieldpay and keep it high level and simple, we solve for client monies and complex payments. It's been coined the ugly baby of payments, which I'm not sure I'm happy with, but I can own it if needed. Complex payments are that, right? They're complex, and they're complex for different reasons. So what we've been focused on in is really, really simplifying complex payments, ironically, but the 3 pillars that serve complex payments, which is verify, hold, and disperse. And I think the verify piece in particular will lend really nicely into the stuff we're going to talk with Breno about. But that verify, hold, and disperse, and in all within a regulated, trusted environment. And we've already safely processed billions. So we're just, the focus that I've been leading with the team at Shieldpay is all about sustainable, scalable profitability as a business, and also embedding these solutions in the legal sector in totality. So yeah, super excited to be back, and I love the subjects that we'll be covering this week.
Yeah, likewise. And thanks so much for coming on to share your depth of knowledge and insight. I think it's funny, isn't it, when you're saying about what was it? The ugly
baby of payments.
The ugly baby, yeah. I mean, it's one of those things, isn't it? It's not always seen as sexy, is it? But I mean, it's certainly important.
It's so important. It's so important. It's huge. It's huge for everybody. And even though we're B2B, it's B2B2C, because money moves and it's the end person that, receives that money. It's super, super important. And it's always nuanced and complex. So, or the world we work in particularly. So, yeah.
Excellent. All right. Well, can't wait to dive into some of those stories. And then last but not least, completing our lineup, we have Breno Oliveira, Chief Product Officer at Payabl. Breno, thank you so much for joining us on the show. I know you guys have some news and some research that we'll be talking about very, very shortly, but maybe for our listeners, you could just give a quick introduction to yourself and a quick overview of Payabl in your role.
Thank you for having me today, Ross. I'm very excited to talk about the report that we're about to launch, and a little bit about Payabl. Payabl is a financial technology provider that helps businesses to manage their payments with ease, and we help them make their money flow easily. Yeah. So we offer a handful of products, including online acquiring as well as in-person payments, multi-currency business accounts, cards, fraud solutions in one unified platform. So we try to make sure that the business can focus on what they do best, which is their own business, not all the financial aspects that usually is burdensome for them. And we try to disrupt all the friction for our merchants and businesses. Yeah. A little bit about me. I've been with Payabl for the past 3 years or more. I've been in the industry for 15 years, and I'm currently the CPO, leading the product strategy and execution, and mainly focused on the development of our products as well as our unified interface, which we call Payabl One. And I'm very much looking forward to discussing today all about the reports and many more.
Love it. Likewise. All right. Well, look, we have our panel full of deep payment experts, which is definitely very lucky because we have a payments-dominated news show today. So look, I suppose nothing left to do but dive right in. Our first story this week, the headline, business leaders lose a month to fraud each year, and that's according to research from Payabl. So UK retail leaders are spending 166 hours a year each. That equates to a full working month managing fraud, disputes, and scam-related admin. Nearly 9 in 10 retailers have been targeted by fraud in the last 12 months, experiencing reputational damage and a drop in customer loyalty as a result. Fraud prevention is now a strategic priority, with the majority of retailers saying it is vital to long-term success, with plans to increase investment in fraud tools over the next year. The findings underline the opportunity for fintechs and payment providers to help merchants tackle fraud with real-time monitoring, AI-driven and integrated solutions. So, Breno, I know we sort of teased that you guys had a little bit of news. It seems natural to come to you first on this one, Breno. Maybe you can just tell us a little bit more about the study and the results.
Yes, of course. So we have commissioned this research late last year, and we wanted to deep dive and also understand a little bit better what it means that people talk about fraud, and usually fraud is related to financial losses. We wanted to understand this much further than that, because what's happening is that there is a status quo with merchants and businesses overall it is just the cost of doing business. And we at Payabl, we try never settle for the status quo, so we want to understand a little bit more. And as you mentioned, Ross, business leaders are spending a lot of time on managing disputes, chargebacks, refund fraud, and scams attempts. They are just struggling with time. And what's the ultimate cost? And these researchers show that it's not only a growing concern, but it's a reality. And when we focus so much on fraud, you are leaving things off the table. Yeah. So you don't focus on the growth, you lose customer loyalty. We tend to create, let's say, fuzzy logics to trap those scammers, and we end up hitting false negatives as well, which therefore impacts on loyalty, brand recognition, and many more. But all of those things, they add up to not only losing money, but time. And the worst case scenario, some businesses, they need to scale back because they see as they scale up, their cost to operation, it becomes disproportional to their earnings. And unfortunately, in some cases, they even need to shut down due to the disproportionality of the fees that they may end up paying. Yeah?
I mean, it's incredible, isn't it? I mean, we all know, I think we've all experienced sort of anecdotally that sort of seismic rise in the rates of sort of fraud attempts and spam and scams and hacks and all of that sort of stuff. Breno, how did the results of the research that you did sort of line up with maybe what you were expecting going in? Was it sort of broadly in line? Was it even higher? Because some of these, I mean, the headline thing, obviously 166 hours a year each, a full month out of 12. And that's at the leadership level. I mean, that's staggering.
Yeah, and when we talk about leadership time, it costs much more than we might imagine. We knew that fraud was rising, and it was clear and evident when we looked at the rise of AI and all of the technologies that we see nowadays. But we're not expecting that it would be at this scale. It surprised us because it was almost unanimous by the leaders that we interviewed that they said that they do face this issue, and they want to tackle fraud from a different perspective. But in a contradiction, when they mention about their roadmaps and their strategic moves, they tend to not top fraud as top 10, although it's the top 10 when it comes to time that they spend. But, on the positive note, I would say that the good thing is that merchants recognize the threat, and the vast majority of them want to add fraud as a long-term success and longevity of their businesses, which is a good thing. On the PSP and the fintech side, I can tell you that we have something that many others do not have, which is data, and we can fight fraud with data. But at the same time, when we talk about data, we need to remember that fragmentation and segregation of the data many times create a vacuum. And that's where I believe that ecosystems, they need to play a vital role here, where they talk to each other. And although we talk usually to the same card schemes, but it's not the same way that we share the data, the metadata of consumers. But I think that unifying those behaviors and also making sure that the data is shareable will be a game changer for whoever is in there to grab it. So unifying the data, creating a simple and a connected way across channels would be a game changer for sure. And to complete the picture, we can definitely use AI as a prevention tool against maybe AI as well. So without adding further friction to checkouts, right? Because we don't want to harm the consumers.
Yeah, the point about AI is such an interesting one, because I think we can't, as an industry, not embrace technologies where the bad actors in the system are already using these technologies to commit scams. But at the same time, it's not a straightforward, it's not a silver bullet, is it? You can't just go, all right, well, here's some AI problem solved. There's no quick fix to this, is there, Sophie?
No, I really don't think there is. And I think what Breno just said is I was sort of reflecting on options here and what we can do. And we at Shieldpay particularly, we're always, acutely aware of fraud and what we can do to mitigate against it. And people try to spin up websites like ours, try and act like us to defraud our customers and so on. So we're constantly on it, and we do a lot of work to protect the business and our customers. But one of the things that I think, Breno, you just shared as well is the data and the kind of uniformity of this. I think one of the trickiest things for anyone in this industry is to mitigate against fraud. You can't provide a uniformed approach. And therefore, because if you provide a uniformed approach, the bad actors go, okay, well, I just need to get over this because that's how everybody is mitigating against this. So you can't be uniformed in how you protect against these things. However, there is a lot of consistency across how all of us are doing our fraud mitigation and our work against these things. And one of the things I was sort of working through, and is we've navigated and challenged internally here over the years, is kind of passporting. So whether there's a way that you can have the fraud controls across multiple players, and then passport certain pieces which aren't, which differ per entity, and therefore you can retain that autonomy, but there you can put kind of a robust, multi-layered shield against these things. Because I think it's not going to be solved by one person or one player. It's going to be collaborative and cohesive across our industry. But what that looks like, and I mean, I don't know about you guys, even when I work with some of the banks, it's like it goes into this big black box or big black hole that we can't talk about, because it's like, I can't tell you what the mitigators are, but I can't process that transaction right now. And you're like, oh, okay, how do we work through this? But I think it's a tricky one, but it's amazing that we've got more insight now. That's what's powerful. And AI fighting AI is brilliant. Or, tackling AI with AI is absolutely, the way forward, I think.
And I mean, you're so right in what you say. This is an industry-wide problem. And I think the sooner we sort of get together and share that data and share some of those mitigations in terms of how we start to tackle it, arguably the better. Samantha, keen to bring you in. What was your sort of reaction to sort of reading this story?
So I think really good to sort of see the problem approach from a different angle. I think the point that Breno made around assumed cost of doing business is an interesting one. And it kind of took me to broadening it out from two different angles. Firstly, because we were just talking about AI versus AI, is just the amount of time that we are apparently spending as an industry on this when we are just talking about, human-centered fraud. And we're now starting to have conversations around agentic commerce and what would need to happen once agents are in the loop of transactions, how fraud models would need to change to adjust for the fact that, geolocation software is going to be pointless, behavioral analysis for tools that are effectively quite mono-programmatic in terms of how they approach tasks. It completely unpacks it in a different way, and we haven't even gotten a handle on the first thing yet. So that's kind of something to contend with. And to Breno's point, getting everyone around the table sooner rather than later, really understanding the full extent of who we need to bring into the regulatory perimeter to make sure we've got the hooks and the accountability, because we know we haven't solved for that yet, but how we deal better and on almost more of a utility basis, I think, is what Sophie was talking to, with not just the fraud that we have now, but the new fraud we could see through this different kind of agentic commerce. And then the second bit that I was sort of leaning into around the cost of doing business was almost it being seen as a fraud conversation, and at best, a cost line associated against the rails that the payment is transacted under. But when I think about this, so much of this is down to, in the current sort of model of commerce, human agency. And therefore, you need the financial literacy, you need the confidence, and the sector as a whole relies on confident people managing their money. And where we see so many people hit by fraud, the cost of doing business is not just the fraud that you may have to share the refund for. It's actually what it stops the consumers from doing with you going forward. So we know we've got a massively underserved population around wealth management, investment management, pensions, all of those sorts of things. If they have had, a really horrendous fraud experience through just doing basic transactions, their willingness to come to the table to actually take some of the steps to improve their own financial well-being are definitely going to be hampered. So I think not looking at cost of doing business so narrowly as to the fraud line itself, actually looking at it holistically across the consumer life cycle.
Yeah. No, it's a lovely point. And I think this is a story I honestly think we could spend the entire episode talking about, but unfortunately, I've got the difficult job of trying to keep us to time. So I'll move us on to our next story. Another interesting one that I think we can pull the bones out of. This one comes from The Guardian with a headline, UK banks seek alternative to Visa and Mastercard after Trump fears. UK bank bosses are contemplating the creation of a new payment company to reduce reliance on US card schemes, Visa and Mastercard, amid growing fears over Donald Trump's ability to turn off US-owned payment systems. Kicking off with a meeting chaired by Barclays UK Chief Executive Vim Maru, will bring together a group of city funders that will front the costs of a new payments company to keep the UK economy running if problems were to occur. About 95% of UK card transactions are made using payment systems owned by Mastercard and Visa, a dominance which has become far more relevant as cash use continues to decline. However, unlike similar conversations happening within the EU, in the UK, Visa and Mastercard are working within the initiative. Both companies are part of the new funders group, giving them a stake and a say alongside a large number of banks and payment companies, including Santander UK, NatWest, Nationwide, Lloyds Banking Group, the ATM network body Link, and Coventry Building Society. Samantha, I'm going to come to you first on this one. It seems like most of the story, most of the publications around this one have sort of gone really big on the Trump angle on this. Is that the full story?
It isn't. And I will say my feed, my DMs have been dominated by two work-related topics in the past week. One is a very well-known TV show that's managed to set its latest series in payments, will remain nameless, and this Guardian article. And I think much of the conversation on both could have been saved with a little less sensationalization in the sort of view of events and tighter involvement of industry experts. But yeah, let's actually just do some fact checking on what's actually happening in the UK right now. We obviously had the Ghana review, we had the Treasury's National Payments Vision. It determines strategy, a governance construct that the bank would oversee to coordinate the design, the delivery, monitor the strategy. And it's that governance that includes this delivery vehicle, which allows industry back into the driving seat, basically, of what they are asked to fund on behalf of us all. And that's what the delivery co is there to do. A huge part of this is obviously to restart those activities, to replace the account rails that stalled under the previous governance and delivery model. And whilst supplier concentration risk and supplier geography will have been features in the debates that led to this point, that the convening of bank leaders this week is to preempt a shut-off is definitely a huge conflation of issues. And I think for, the comments around MasterCard and Visa being at the table, yes, regulatory posture is different across jurisdictions. That's nothing new. But as far as those two organisations go, their strategy has taken them well beyond cards for quite some time. You could say they're preempting maturity and potentially decline of their own core products, as you would expect them to. And that prime example, obviously, being Vocalink, a MasterCard company. And they run the existing account-to-account rails. But I think stepping beyond this, what we had through the National Payments Vision and we have through the work of the RPIB and the Delivery Co. is a once-in-a-generation opportunity to reimagine what we need for that next generation of payments infrastructure. And if you're kind of taking a sort of Porter's Five Forces mindset around kind of competition, you kind of might be missing the gameplay of the future, where the action is happening and what you need to do to be part of that. So I don't get as excited about it, to be honest.
I'm with you. This feels much more progressive and much less reactive than it's 100%. Perhaps been presented, particularly in this article. And I think as well, when you look at the infrastructure plays that have happened, say, in India with the unified payments infrastructure, or in Brazil with PIX, you can see the opportunity to sort of being progressive and thinking through what good innovation might look like in this space. Sophie, I suppose, what's your reaction to the story and some of the great points that Samantha made?
Oh, yeah, Samantha nailed it, completely nailed it. It's so true. And I think we joked at the beginning about, why ruin a good story with the truth? But it is actually really important. I mean, my reaction when I read it was like, you kind of read it and you get sucked in. And then I was like, hang on a minute, this doesn't make any sense. Like, MasterCard and Visa, they're involved with the MPV, and you start sort of getting your head into it. And actually, it's interesting because you're sparking so much emotion and so much kind of, you're playing to people's emotional side, you're playing to the political state of the world, and it's really tricky, especially when I think about it from a payment standpoint, not just from a domestic national MPV standpoint. But we've all been working so hard for so many years as an industry to get global interoperability. And then a statement like this is, everyone retract, come back into your nations and think only for yourselves, or, which isn't the outcome that any of us want or need as we go forward. And it is quite sobering when behaviours of one person in power can threaten so many really, really good initiatives. And I'll stick to payments. I'm not going any further anywhere else. But it's really important that we keep that focus, we keep that energy. The MPV is superb and it is holistic in its approach. And that is something that's really important. And Visa and Mastercard will play a part in that for sure, as they already have. And having the domestic capability to improve our movement of money is the most important thing. And staying globally connected to make sure that we continue to push for that interoperability, to make sure it's inclusive, it's accessible. It's super, super important to me. So yeah, as much as I got, you can get emotionally involved and you read it and react, when you start getting into the detail and the facts, it can be damaging, and that's sobering, but we know the truth, and we need to just make sure we keep talking that truth.
Absolutely right. Breno, kind of everything I think that we've talked about shows that maybe the positioning within this article isn't quite the story, but I suppose it's also reflective maybe of where we're at sort of politically at the moment, just sort of globally. Some of the things that we've maybe taken for granted for a really long time are starting to shift quite quickly. And, some of the political moves that we've seen of late have been maybe unexpected, a little bit turbulent. So I suppose it's not completely alien that some of those things might start to shape some of the narratives that we're seeing from maybe a press and journalistic perspective.
Just for the record, I believe that there is a very low likelihood that Visa and Mastercard will ever be turned off. But I think it sparkles the conversation on how diverse we want to be in the payments industry in terms of payment methods. And we can see some shifts that are driven by user behavior that shows as well that some of the payment methods out there, they are meeting the customers where they are. And we saw the growth of A2A payments, especially in Europe, with Blick in Poland, Bizum in Spain, and MBWay in Portugal. And of course, the most famous name, Pix in Brazil, where the adoption was massive so fast. But I think the conversation is all about how can we make sure that we can offer the payment methods for the customers that they need, and not like what's going to happen in an apocalyptic world where we don't have the card schemes anymore. I don't think so. I just think it's just a headline, so to speak. But we need to think about how the payment landscape is changing. If you look at Wero, for instance, it's an initiative from EPI, and they have massive banks involved, heavily involved, and the experience for the user is paramount. So easy to pay with Wero nowadays as well. So we will expect that this type of payment methods will increase with time, and but then it brings another question, right? So I'm Brazilian myself, and I have seen how Pix changed the payments landscape in Brazil in just a few years. But at the same time, Brazil is a big country, right? So how can we replicate it across the globe? Yeah, because we don't want to have segregation of payments. We want to have this ecosystem well integrated, like Sophia said, and how this integration will make sure that everything is instant. Fraud is being fought in the right way, and without impacting the end consumers in a bad way. So I think this is exciting moment, to be honest, especially when it comes to Wero and local payment methods that may be getting adopted in the upcoming years. And I expect that the end game will be that the end consumers will have more options, and more options is always better.
Yeah. I couldn't agree more with that. And, I think Breno's absolutely right. This is an exciting moment. This is sort of UK PLC saying, all right, we've got some great infrastructure, but we're not going to rest on our laurels. And we're thinking about, right, well, what does that next generation look like?
Yeah, absolutely. And I think, comments that have been made around who's involved in the delivery co, this was all sparked by a funding call late last year that's brought together this initial group. And industry is there for you to step in, and sometimes that will be with your voice, sometimes that will be with financial support as well. But the opportunity is there. We have the benefit within the UK of having a very open regulatory community and sort of policymaker community. So it's not a time for people to sit by the sidelines. If you have ideas, use your voice. There may be different degrees to which different institutions can contribute, but the more we get in, the more we'll get out of this. So I'm really excited to see what happens next.
Me too. And I love how we've turned a story with a headline that was a little bit maybe heading in the fear-mongering direction to one of sort of optimism and excitement.
Absolutely. That's what we're here for.
Exactly. All right. Well, look, on that note, we're just going to take a quick pause and we'll be back with you very shortly.
Hey folks, David Breer here, CEO of 11FS. Here's something you might not know about me. I get a lot of people trying to impersonate me online, fake profiles, scam emails, the lot. And a big part of that comes from data brokers, hundreds of them, quietly collecting and selling your personal information. Your phone number, email, home address, job title, all out there and all fueling identity theft, scam calls, and spam. If you've ever searched your own name online, hands up, who hasn't? You'll know how exposed you really are. That's why we've partnered with Condie. They contact 230 plus data brokers and tell them to delete your information properly and legally under GDPR and CCPA. Doing it yourself would take hundreds of hours. Condie automates the whole thing and keeps working with repeat removal requests if your data reappears. I tried it, and within days, saw brokers deleting my data. You can even protect your family members too. Fintech Insider listeners get 60% off an annual plan. Just head to incogni.com/fintechinsider and use code FintechInsider. And yes, it's risk-free with a 30-day money-back guarantee. You'll find the link in the description.
This episode is brought to you by Stouffer's. Here comes three-time juggling champion Natalia Rogers. She's juggling law school, her TA job. Oh, narrowly catches the laundry. What's that fourth ball? Parents unexpectedly showed up at dinner time? Is that too much for Natalia? Not with Stouffer's Chicken Alfredo and its mouth-watering mix of Asiago, Romano, and Parmesan. When you're juggling four things at once and the clock strikes dinner, think Stouffer's.
Now a quick break from the headlines to tell you about our latest Insights pod, where our CEO, David Breer, sits down with fellow CEO, Emma Hagan, UK CEO of Clearbank, the UK's first new clearing bank in the UK in more than 250 years. Clearbank is building the infrastructure layer that so many fintechs and financial institutions rely on, and now it's starting to push into the next wave with digital assets and stable coins firmly on the agenda. Emma unpacked what Clearbank does, what it takes to scale bank-grade infrastructure, and what this move into digital assets really means in practice. It's out now. Just head to the podcast below this one. All right, our next story comes from Finextra with a headline, Global FinTech Investment Rebounds in 2025, supported by stronger exit activity. So after 3 years of declining investment, the global fintech market turned a corner in 2025, attracting $116 billion, up from $95.5 billion in 2024, according to KPMG's latest Pulse of Fintech report. Overall deal volume dropped to about 4,719 deals, an 8-year low, indicating fewer but larger, more selective investments. Venture capital and M&A activity drove growth, with digital assets and AI attracting significant funding. Payments investment remained steady and investor interest stayed strong in B2B payments, real-time infrastructure, and emerging markets, setting a more balanced stage for 2026. But exits surged to $104.4 billion. That's the third highest on record. Sophie, I mean, lots of, I suppose, sort of different indicators of different things in this story. What stood out for you?
I think it's a great story. There's some great facts and data points, and I think it's so refreshing. I attended quite a few events just sort of through the latter part of, well, actually probably mid last year, where, just wasn't saying that story and we weren't hearing that. It was much more of a negative tone around investment and focus on fintechs and so on. So, and the payments industry in totality. But I think there is a much more positive story behind this. And I think that actually it's still it's shifting the behavior of startup scale-ups who require investment in different spaces. It's shifting still from that behavior that we saw pre kind of 2021, where it was all, money, throw, go, don't worry about profitability, just go, grow, test, learn, grow, do whatever you need to do, here's the money, go do it. Whereas now, obviously, it's a very, very different landscape for businesses, which is, profitability, scalability, resilience, and sustainability. So I think it's that is just reaffirming that's still the landscape. I think AI is... that is absolutely the area of focus at the moment and getting a lot of attention and funding and so on. But it's also quite turbulent from what I read. I'm not an expert in it, so I can't give a huge amount, but that's certainly what I'm picking up. I think we still run the risk of the talent drain. And I think coming back to some of the bits that Samantha, you mentioned at the top of this podcast, I think that the risks that are socially kind of happening and the ways that we're approaching things, we're leaking talent. There's still a bit of a tough landscape for entrepreneurs in the UK, and especially within this space. So I think it's a really good news story. It's a really positive one. I think it's still a reset, and I'm happy to have challenge here from you guys. But I still think it's a reset. It's still proving that sustainability and scalability and profitability of businesses, as opposed to just throwing money in and looking to test and learn and grow very quickly. So yeah, that was my view on it.
I totally agree, and you made so many great points. And I think you're absolutely right that this is not what we've seen before in terms of lots of funding for whatever you want to do and sort of lots of bets right across the landscape. This feels much more intentional, sort of more towards some of those sort of later stage investment companies that have clear routes to scale, clear routes to profitability, as you say. But I agree with you insofar as I think this is a really positive step in the right direction for investor confidence sort of returning to the market. But Sam, it still feels like one of the big sort of issues when it comes to the UK and certainly fintech in the UK is around those exits and those IPOs. And it really still feels like even if you, as a business, sort of, UK born and bred would like to list or go public in the UK, it certainly feels like the prevailing sense at the moment is that the value isn't necessarily there for sort of shareholders and investors.
I think it is just a different time, and Sophie talked to it. I think we have matured as a sector, and I think what the strategic context supported 5-10 years ago, it just doesn't fundamentally now. And I think there's been a lag around investors almost kind of recalibrating sense of expectation. They know full well the funding availability has been different, but things like shifts in the regulatory posture, lessons learned that we've seen from our biggest success stories, and you know, some of the sort of gnarlier firms that we've seen sort of come into and exit the marketplace. You know, that being said, I still hold by the fact that this is net positive. I think part of that, I talked to reg posture. Certainty is up in a number of areas. You talk to things like digital assets. We're counting on both hands multiple times at the moment around the number of papers that are coming out sort of, you know, in the last 6 months and the coming 6 months around digital assets from our regulators. So that certainty of what it means to step into the market is building, which is hugely necessary. And you know, going back to previous discussion, I'm sure that the UK is seeing an uptick from divestment away from what are now seen as less predictable jurisdictions, right? And we have, I think, a growing pedigree on sustainable scaling in the UK, which I think also builds investor confidence. And I think when you talk to the sorts of things that people are looking for now, it's understanding the dynamics in the market. So when you think about things like payments and digital assets, seeing, I think, more shifts towards sort of infrastructure plays rather than some of the sort of, you know, front-end product type investments. And again, part of that goes down to what is the regulatory burden. When I think about the sort of stable coins regime as it's developing, when you look at what has been set out by the bank, the regulatory sort of burden that sits around issuance versus that of custody or that of being a sort of rail in the process is vastly different. So bets are going to be placed accordingly. So as ever, this is one of those situations where all of those parts of the market need to come together in terms of, you know, the sort of policy that incentivizes that sort of competition and choice in the economy, investors understanding where they're going to get a return, and as Sophie rightfully said, the right talent to sort of take the opportunity and run with it, basically.
I definitely agree with Samantha and Sophie here. I think that the mentality of growth at all costs is gone. So now we need to look at, especially the investors, they look at profitability, efficiency, different ways of creating revenue. And I think from a product engineering standpoint as well, the investors now expect that we know all of the things that we were talking about like 15 years ago, that we know what cloud is, what API native is. So now it's time to implement them, not to reinvent them. And as you see where the investments are nowadays, especially where they are funneling to, it's more on AI, the new technology, where we are not so good at. But if you put AI aside for a moment, we can think about the investments that are being made today more narrow but more precise. And that's where we should focus as an industry as well, where we see payments steady, but on a real time infrastructure with strong signals from the customers that they demand the best experience now. Yeah, we are all used to use apps nowadays. We are used to P2P payments. So I think the future is bright. The rebound is positive. Most definitely from my standpoint, but there is no more hype. It's all about making sure that we can sustainably keep the growth and make sure that revenue is targeted from day one.
The bit that I just thought really resonated with me was the fact that, like Breno said, I think there's something really interesting as well, and it's something I spoke about last year a bit, was the consumer payments. So what we're used to as people to people as a consumer of payments isn't translated at the moment into businesses. Not entirely. It's much more cumbersome and full of friction, and things, you know, disappear into ethers, and you're like, that doesn't make any sense. And so, but the tolerance of that is going, because as humans, we're so used to, as consumers, our payments, you know, instantly moving, money instantly being where it needs to be. And I think to that point around growth, but also that sustainability in the infrastructure for businesses, particularly when we're starting to look more at B2B payments, again, that demand for safe, sound, robust, resilient capability rather than a kind of patchwork of lots of bits and bobs is dying out. And then that infrastructure around embedding and giving that full capability is really, really powerful and required. I don't think people have the tolerance to wait. And also the other piece around digital assets, we touched on, there's such an exciting market here, especially in the UK, around things like stablecoin and our evolution of that and getting the policies right. I think there's just such a hungry market, a capable market, an ambitious market ripe for investment as well, which, complements all of this conversation.
Well, it's actually, Sophie, the perfect segue onto our next story, which comes from Reuters with a headline: Stripe's crypto unit Bridge obtains initial approval to establish a trust bank. Bridge, the stablecoin infrastructure unit owned by Stripe, has gained preliminary approval from the US Office of the Comptroller of the Currency to establish a national trust bank. If final approval is granted, Bridge would be authorized to custody digital assets, issue stablecoins, orchestrate stablecoin services, and manage stablecoin reserves for businesses and financial institutions. The OCC approval is intended to help Bridge support enterprises, fintechs, crypto companies, and traditional financial institutions to build with, quote, digital dollars within a regulated federal framework. Stripe acquired Bridge in October 2024 in a deal reportedly valued at around $1.1 billion. And the new trust bank charter would deepen its integration into the regulated US financial system. That's Stripe's integration. Breno, I'll come to you first on this. I mean, what stood out for me in the previous story and sort of in this as well is when you look at the areas that are attracting innovation and where we're seeing a ton of investment, AI, digital assets, you're really talking about something that's going to affect the entire technology stack right down to the infrastructure layer. And so I think for me, it feels like, say, the next wave of disruptive innovation has the potential to go much further, be much more fundamental than maybe the last sort of 15 or 20 years that you saw. Is that sort of in line with sort of where you see the market going based on what we're seeing at the moment?
Well, I think it's a good move. If you look at 2025, what happens is that stablecoins start to be used and they have the value of their own, where we are moving from a speculative market where crypto was being just speculated and traded for gains, and stablecoins start to be used as instruments, financial instruments. This shift is what will give value to these digital assets. And I'm not saying that SWIFT is going to go anywhere, but for many of the cases that financial institutions use SWIFT, maybe stablecoins would be a better choice. And what happens is that the frameworks, the regulatory frameworks around it will also dictate how fast we'll be able to adopt it. And perhaps stablecoins will be the equivalent to P2P payments in the future. And that's what I expect, because liquidity is still an issue, and it's always going to be an issue, right? Because businesses, they need liquidity today. So, and the liquidity that they need today is in reference to how fast payment institutions and financial institutions can process their payments. So if you cannot process their payments fast enough, it means that down the line they will have problems with liquidity. I'm very optimistic about stable coins, and I believe that as the years go by, we'll utilize this more and more. And the framework's there already. It's just a matter of utilizing it, and the infrastructure that will be built, just as Stripe is trying to do. I think that's going to be massive, and adoption will just increase.
Sophie, how good do you think stablecoins can be in terms of solving some of those complex payment use cases that you sort of mentioned at the top of the call? I mean, I think we can probably consider it as sort of hygiene in terms of solving for some of those international payment use cases. How sort of mainstream do you see stablecoins becoming?
It's a question that dominates a lot of my conversations with some advisors and different people that I talk to. I think I know it's not a clean answer, but it does depend. So I think personally, with the knowledge I have and being somebody who's worked in payments for 20 years, I see stablecoin as the gap between, the gap that's been required, exactly like Breno said, between kind of your crypto and your fiat. And also, I just think even if you if you think about decentralized and centralized currencies and ways of moving money, I think there is such a strong use case for complex payments to utilize stablecoin to solve for this. I think there is still this gap. And I think there is this, I was having a really good chat with somebody who's heavy in this space and has kind of done a lot of this global interoperability, utilizing a lot of the digital tokenization and movement of money instantly globally. And you sit there and you're like, this is fantastic. We're adopting all the technology that gives us immutable ledger. It gives us that safety and soundness and speed of movement of currency that makes it accessible and inclusive across the globe, which is exactly the end point. But I think that sophistication of understanding that and being able to really bring that to life, I still think that gap is quite large. And I actually think, especially I work directly, so Shieldpay sells directly into the legal sector. If you think how the legal sector work, and then you start throwing in things like even a digital contract, let alone a smart contract, which obviously stablecoin smart contracts hand in glove, they're worlds apart, and at the moment there's a big gap to adoption. I think that this is a great solve for a lot of the complex payments that we see, and I think that business application of experience business application needs to happen now. So I think this is super exciting, and I think even when the blockchain was launched, when crypto was launched, when all of this started coming into our market, you could see and feel the possibilities and the benefits of this technology that it could bring to the payment ecosystem. And it's getting ever closer to adoption. We need to bridge that gap with real business experience and real life use cases that make the difference. I think the easiest one you can do is that treasury management in a big corporate, right? That treasury management, that sophistication of liquidity management. If you had stablecoin that can translate to all the different currencies, that's a great use case. Complex payments of a large M&A with multiple people involved or multiple currencies, jurisdictions. Again, you have a much safer way of transferring the value. So yes, there's a huge use case, especially in complex payments. I just think we got some work to do on the on getting to the adoption. I'm fortunate enough, I was saying I've got onto the FCA stablecoin sprint, which I'm super excited to be part of, because I think we need to apply this, and we need to apply it now so we can start adopting it more widely.
Yeah, look, you're so right to spotlight some of those barriers to adoption, like we all know the frustrations of going through a mortgage journey or something like that, and then you can't even do it. You still need a wet signature and all of that sort of stuff. So smart contracts feels like a lifetime away. Sam, where are you at on the growth of stablecoin adoption? Are you bullish, or are you a little bit more hesitant?
I think reasonably bullish. I mean, way back when the FCA was sort of first looking at its taxonomy of digital assets, and it was talking to crypto stable coins as were determined back then, and we hadn't really gotten into the conversation on tokenized deposits, but it was quite clear that if you could reconcile with some of the challenges in the early positioning of stable coins that almost more truly addressed those requirements of money, it then had the opportunity to fulfill its potential in a way that crypto was never going to solve for. And so I think a lot of the time the conversations can be conflated, but actually where I think we end up is sort of crypto being considered as a class to one side. And then when you're looking at sort of, money management, whether it's at a firm level, whether it's at an economy level, and so on across borders, you're talking about, is there a CBDC in jurisdiction? Are there tokenized deposits offered by the commercial banks in jurisdiction? Are there stable coins available? And the blend of all of that, I think, is going to vary jurisdiction to jurisdiction, corridor to corridor, depending on what we're trying to solve for. And really, when you think about it, it ought to. That kind of shows effective competition in operation. So I think reasonably bullish in a combination of a broader ecosystem of smarter money, and with still a way of, reconciling the aggregate picture, communicating consistently, so we don't lose that visibility at scale, that operational effectiveness at scale, that we know we all need as part of a very heavily regulated sector.
Yeah, I mean, there's still just a ton of debate around where this is going to go, even in the next 5 years. I think Citi have a bullish sort of case where it hits 4 trillion by 2030. And I think JP Morgan are saying it'll be lucky to get to 600 billion in that time, because it's not going to accelerate beyond where sort of crypto's heading just sort of organically. But of course, the right regulatory frameworks like the Genius Act, obviously, and all of these things, I think could be a massive enabler. So yeah, one I think that's still to play out, but one that we'll certainly keep a close eye on. All right, well, on that note, we're just going to take a quick pause and we'll be back with you very shortly.
They always tell you there's a catch, a compromise, an asterisk. Terms apply. See store for details. Maybe less than advertised. May vary by mood. Probably. Sprite Zero Sugar? It's different. It's the lemon lime flavored refreshment you want with zero sugar. So, no fast voice? No caveats. Just refreshment. This is Sprite Zero Sugar. Obey your thirst.
All right, and finally, something a bit different to end the show this week in honor of Valentine's Day last weekend. This headline comes from TechCrunch. Score, the dating app for people with good credit, is back. Launched just days before Valentine's Day 2024, the app required users to have a credit score of at least 675 to register. At the time, its founder said he created the app to encourage partners to talk more about personal finance, since, quote, financial compatibility is quietly one of the most important relationship factors, yet no dating platform addresses it directly. The initial version drew criticism as being too exclusive or classist, despite attracting around about 50,000 users in 6 months. The relaunched app is more inclusive. Anyone can join the basic tier without verification, while a, quote, verified tier requires ID and credit score verification for extra features. Credit and identity checks are done via Equifax with soft pulls that don't impact credit, and the app does not store full sensitive financial data. I'm slowing down because I'm trying to think, like, what's the angle on this? Where do I go? Who do I throw to? It's just really weird. It's just really weird.
I didn't think I'd be talking about this on a payment podcast, but I mean, why not, right? I guess, we're here now. We're going to roll with it.
I definitely see that they are trying to do, but if they did something like this when I met my wife first time, I would definitely not pass. I'd be single forever.
As soon as I read about it, I was just hearing an advert with TLC No Scrubs playing in the background. But other than that, I think I fundamentally agree with the point of financial compatibility being key in a relationship. But as in business, I think it's what you choose to measure to drive the outcomes that's important. And a credit score is a point-in-time thing that doesn't necessarily talk to the financial values that kind of drive outcomes over time. And I think the really important thing as well is it doesn't account for those systemically driven differences in score that aren't down to the individual. So there's almost a risk of kind of bias creeping in, aside from any moral view you have on the product in its entirety. So I can see what they're getting at, but is it the right measure for the outcome that they're looking for? Question mark.
I think I'd add my flavour to that as well, as in, I completely agree with what they're getting at. And I think I was reading something else. I think you've probably all seen on LinkedIn the Mad Money Club as well, where getting women to talk more openly about finances. Because again, and I've met quite a few kind of women and startups where they're trying to encourage people to safely feel comfortable talking about finances and what it means to them and where they are. So I think as individuals, we're not very good at, I'm a sweeping statement. But that individually we're not very good at talking about it, then, actually, if it is something that's really important to you and the financial compatibility for your dating site, I think I like what their statement is. And you could argue that each dating site needs a USP. There's enough of them. So, they're trying to get into a different market maybe. I think I'd be the same as Breno though. When I first met my husband, I'm not sure whether I would have passed or he would have passed. So again, I think it's individual to everybody. And I think that, it's a really, really interesting spin on it all. But talking about finances, being confident to talk about finances and your financial position without being shy or making it taboo. I think the Mad Money Club was talking about they're doing a couples one, which I thought was fascinating because, I will speak openly and honestly, me and my husband are terrible at talking about money, and I work with payments and in the financial services space. We do talk about it, but it is a tricky subject. So I like that they're bringing it to the forefront, but and everybody's individual.
Yeah, I definitely see the appeal on that. And as I said before, I'm not sure if that's the right way to measure and to make a door. But anyway, what I really think is that couples, they need to talk about their financial goals, and that's where they should meet and try to understand whether their goals align, rather than knowing where they are at the moment. There are so many decisions that can be made in a point in time that, some people need to go on a mortgage early in their lives because of an opportunity, or they will go to university and therefore they need to get some loans and so on and so forth. I understand the appeal, but I do think that there are better ways to talk about money and to increase financial literacy between couples.
I like that.
Who said romance was dead, eh? Look, I think that's the perfect way to end what has been a really fun show. Thank you so much to all of you guys. Maybe we can just do a quick whiz around. Where can people find out a little bit more about you and your company? Should we start with you, Sophie?
Yeah, of course. Yeah. So like I said, we're Shieldpay. You can find us at shieldpay.com. You can find us on LinkedIn. We are going to be continuing our quest to continue to solve for client money solutions and working with the legal sector and with the changes of regulation in that space and the lack of appetite for the legal sector to hold and manage client monies, leaning into the stories we've already spoken to, helping mitigate fraud and the risks associated with client monies and being able to hold it and then disperse it into the right places. So we'll continue that great work and also continue to innovate with payments, especially with digital payments and what's ahead of us. So really excited about that. And thanks for having me.
Pleasure, Sophie. Thank you so much. Samantha, how about you?
Yeah, I'll keep it short and sweet. You can find me on LinkedIn. I'm usually posting about sort of where I'll be heading next or what I've learned from industry. So that's the best place to find me.
Excellent. Thank you, Sam. And Breno, how about you?
We are Payabl, so we help merchants, business and enterprise alike to make their money flow. So you can find us at payabl.com, and you can always find me on LinkedIn, Breno Oliveira. And if you have ever an opportunity to meet face-to-face in any events, I'm more than happy to chat about payments and the payments industry. Thank you for having me.
Perfect, Breno. Thank you so much. As for me, likewise, you can find me on LinkedIn. And if you want to learn more about 11FS Consulting, you can find us at 11fs.com/ventures. That wraps up today's episode. Thank you so much for listening to the show. If you like what you've heard, please make sure to follow us on your favorite podcast platform of choice. And if you really like what you've heard, why not share the podcast with a colleague or friend? As always, if you want to join the conversation, find us on social media. Just search for 11FS or Fintech Insider or email podcasts@11fs.com. Thank you again and goodbye.